Hey Webby Trades! I want to do a video analysis update on Cathie Wood and her growth stocks. We have a new year and a new quarter beginning, and I think we could see some new alpha in this market. A lot of them will be in the ARK ETF, like the biggest holding. This is a wave 1 and a wave 2 from the March 2021 low. This is a huge wave 3 and an ABC correction ending wave 4, where the length of wave A placed at the wave B high is where wave C ended at the 50% retracement. So, in my opinion, wave 5 will be the length of wave 3 placed at the wave 4 low. That will take Tesla past my original target of 1368. It will take Tesla all the way into the 1500s and confirm that this is not a wave 3 and a wave 4. If Tesla goes past 1368, it will confirm that this is a wave 1 and a wave 2. So 1368 would just be, in that case, the minimum wave 3 target. We'd have a shallow wave 4 before a wave 5 higher. That's where some of the Cathie Wood targets that she's talked about, that she gets a lot of criticism for, might come into focus in the bigger picture. But the small degree count is the most important for Tesla. This is a wave 1 and a wave 2. This is a wave 3 and a wave 4 that retested the wave 1 high. So we'll hold above 780, go the length of wave 3, placed at the wave 4 low. I think we'll wake up in the spring, more conservatively the summer, see Tesla in the 1500s and the 1600s even. So here's Enphase Energy, huge holding of many clean energy ETFs. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2, then another wave 1 and another wave 2 at the 78.6% fib. So an extremely important level for all clean energy bulls is 143. The length of wave 1 placed at the wave 2 low says Enphase Energy is going to be going to 315 for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. And that means that a lot of clean energy stocks are going to be doing quite well, like First Solar. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. And yes, this is another wave 1 and another wave 2. The length of wave 1 placed at the wave 2 low can take FSLR to 139 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high, the length of wave 1 placed at the wave 4 low would give a wave 5 target of 177 for First Solar later in 2022, possibly even the summer. So I think 79 is a tight stop. The invalidation is 67. We'll see First Solar head into the 140s and even the 170s in 2022. Here is XPEV. It's a wave 1 and an ABC wave 2. This is another wave 1 and another ABC wave 2. So I don't believe XPEV will break below 33. I think this is another wave 1 and another wave 2 will go to 70 before a shallow wave 4 and a wave 5 higher. That will take XPEV to a new all-time high. Prove that this is an IPO-based breakout like Enphase Energy, like First Solar. They have been being accumulated by large institutions for the past year, and IPO-based breakouts are huge indicators that a long-term bull market has begun, and that's why they're making a lot of these growth stocks, especially in the Chinese sector, very difficult. I think this is a wave 1 and an ABC wave 2 for Li Auto. This is another wave 1 and another wave 2. I believe Li will hold above 25, just like XPEV will hold above 33. We'll see that this is a wave 1 and a wave 2. We're going to go to 44 before a shallow wave 4 and a wave 5 higher. Just like XPEV, that will take Li Auto to a new high, likely in 2022, confirm an IPO-based breakout, confirm a lot of accumulation was taking place in 2021. So if Tesla and Enphase Energy and First Solar have very high probability setups, I wouldn't bet against NEO during that time. This is a wave 1 and a wave 2, but most importantly, this is a 1, 2, 3, 4, 5 wave 1. And it looks like wave 2 is ending between the 50 to 61.8% fib. So NEO is the only really clean energy stock that I talk about a lot that has broken the May low. So that's why I think, especially for NEO, it's very important to analyze it with Tesla, Enphase Energy, First Solar, and XPEV holding the invalidation levels I just went over. This is an A, B, C correction in the bears' opinion. So what the bears believe is that this is wave A, this is wave B, so they've got a clean short on NEO to 20. Here's the problem. They can't put that on XPEV, Tesla, First Solar, or Enphase Energy. And that's not a good idea to short NEO if Tesla, Enphase Energy, First Solar, and XPEV could be doing quite well, which I expect. So there has to be a risk management level. I think 26 I still want to see above, but most importantly for NEO, I want to see the other setups like XPEV, First Solar, and Enphase Energy and Tesla that we just talked about play out. This is a wave 1 and a wave 2. So the reason they're making NEO quite difficult is because 93 is a conservative wave 3 target in the bigger picture. We'll have a shallow wave 4 before a wave 5 higher. So I think NEO could be the Chinese Tesla. I think Alibaba could be the Chinese Amazon. But what's really important to remember about both of those comparisons, they didn't make the American counterparts easy to hold. They made them quite difficult to hold. And a lot of growth stocks in general, the beta is going to be so high that the idea that someone will hold them with a 15% trailing stop, that's kind of a fantasy. This is a wave 1 and an ABC wave 2 that is ending right now at the 78.6% fib. So I'm holding Alibaba, and a big part of my analysis will come from Wayfair and Netease. That's where we get much better invalidation levels. But I think this is a wave 1 and a wave 2. So I'm holding for 370 to be a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. So just right then and there, we can see that there is much higher risk and much higher reward with growth stocks in general. I do believe this is an incredible opportunity, which is why they're making this quite difficult. Every retail trader most likely has been margined out of Alibaba, and the ones that haven't will probably sell for a tax loss. That's the oldest trick in the book, but I think they'll end up chasing it. Here is Wayfair. This is a wave 1 and a wave 2. This is another wave 1 and an ABC correction ending wave 2 at the 50% retracement. So this is why, right, it's just like Neo with XPEV. You have to look at the entire sector. This is a wave 1 and an ABC wave 2 for Wayfair. This is a massive Elliott wave nest. And I think the biggest picture of Wayfair is pretty clear that this is all a wave 1 and a wave 2. So I'll zoom in to the smaller degree that this is a wave 1 and an ABC wave 2. And I remind you, this whole rally was only 10 months. So it could be a lot quicker than we think that the length of wave 1 placed at the wave 2 low takes Wayfair to a conservative wave 3 target of 530. So I want 146 to not get broken. That's a nice stop. A little tighter would be the wave 1 high of 173. I think Wayfair has a lot more highs, and they could be seen in 2022, early into 2022 even. This could essentially just be a massive bull flag. The length of wave 1 placed at the wave 2 low can take Wayfair to 530 conservatively. So it's a very important chart to analyze with Alibaba and with Netease. Netease is a very pretty chart. This is a wave 1 and a wave 2. In the biggest picture, I think this is another wave 1 that is cleanly subdivided into 1, 2, 3, 4, 5 waves and an ABC correction ending wave 2 between the 50 to 61.8% fib. So I think Netease holds above 74 to 77 and goes the length of wave 1 placed at the wave 2 low. It will go all the way to 175 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low would give a wave 5 target of 230 in the bigger picture for Netease. So the bigger the opportunity, the more difficult they're going to make. Here's PSJ. It's a great view of software, especially with a lot of software stocks like Palantir and Fastly near the 78.6% retracement. This is a wave 1 and an ABC wave 2. We have gone deeper than the 50% fib. So most likely this is not a wave 3 and a wave 4. It is another wave 1 and another wave 2. That means the length of wave 1 placed at the wave 2 low gives a conservative, yes, a conservative wave 3 target of 239 before a shallow wave 4 and a wave 5 higher. A nice stop is getting to be a little tight stop would be the 61.8% fib of 115. I don't think 115 goes, and I think this is really kind of the tightest risk management level for software in general. A little wider would be this wave 1 high of 107, but in general, I think the length of wave 1 placed at the wave 2 low will get replicated. I think we'll see, this is the left side of the base, we'll see the base breakout in 2022, and then later in the 2022, we'll even be heading into this wave 3 target zone. The length of wave 1 placed at the wave 2 low says an entire ETF full of software stocks can nearly double in a conservative wave count. That's probably why they're making these so difficult, and there's a lot of holistic evidence that this looks good. Netflix is a great picture of streaming. It's a great picture of software, large cap kind of growth. This is a wave 1 and a wave 2, a 1, 2, 3, 4, 5, wave 3, and a wave 4 that ended at the 50% fib. We retested this wave 1 high in reverse. A nice stop would be 562. A wider invalidation would be 524. And I think this is wave 1, wave 2, wave 3, wave 4. So the length of wave 3 placed at the wave 4 low will take Netflix to that big round number of 800. I think it's going to do very well. I think Netflix is quite similar to Salesforce in that they were leading indicators for the software sector, kind of the large caps at least, and they're going to take a rally higher. And when they do, they're going to bring a lot of the laggards, some of the smaller cap software names with them. Netflix and Salesforce both look good. This is a wave 1 and a wave 2 from this low for Salesforce. The larger degree count is that this is a wave 1 and a wave 2, a wave 3 and a wave 4 that ended at the 50% retracement. So from this low is the most important cycle. This is a wave 1 and a wave 2 ending between the 50 to 61.8% fib. So 225 is a nice stop. The invalidation is 201. The length of wave 1 placed at the wave 2 low will take Salesforce to 357, and that is a conservative wave 3 target. So the stay-at-home sector didn't do as bad as we think. I think that this is a huge breakout and back test of what was a bull flag in 2021. So it looks something like this. This is that classical first leg of the bull flag, flagging consolidation, then breakout and back test of the bull flag. The length of wave 1 placed at the wave 2 low will give a wave 3 target of 357 before a shallow wave 4 and a wave 5 higher. Salesforce and Netflix both look pretty good. I think that they'll see these equal legs targets pretty conservatively this summer, even this spring. Here is TWLO. I love this low of 216. If we're above it, this is a wave 1 and an ABC wave 2. This is another wave 1 and another ABC wave 2. Will end wave 2 and go enter wave 3 of wave 3. This will be wave 1, wave 2 will break out of this base. This will be the left side of the base and the right side of the base. We'll go into the 500s for wave 3, consolidate sideways in the wave 4 before wave 5 higher. The length of wave 1 placed at the wave 4 low would give a wave 5 target for TWLO of 700 in the bigger term, longer term cycles. But I think we get a new all-time high earlier into 2022 before a shallow wave 4 and wave 5 higher. I think we'll hold above 216. I think TWLO and I think OKTA give really nice invalidation levels for the software sector in general. Here is OKTA. It's almost identical. It's a wave 1 and a wave 2. So if we're above that wave 2 low of 185, I think this is another wave 1 and another wave 2. We're going to enter wave 3 of wave 3. OKTA with TWLO will be heading into the 300s for wave 3, have a sideways wave 4 before wave 5 higher. The length of wave 1 placed at the wave 4 low would give OKTA a wave 5 target of 400. So I think that will be hit. And I think we're going to see OKTA not go below 185, go at least the length of wave 1 placed at the wave 2 low for a minimum wave 3 target, have a shallow wave 4 correction and a wave 5 higher. All in all, waves 1, 2, 3, 4, and 5 can take OKTA to 400. And it's a really nice downside level to trade against, just like TWLO holding above 216 is OKTA holding above 185. Here's Fastly. Fastly doesn't have a low to trade against. I still want to see it above 33. It got really close to breaking 33, but I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 ending at the 78.6% retracement. So higher risk, higher reward with growth stocks. This is why for a lot of growth stocks, I take smaller position sizes than I would with value and manage the risk up front, because the length of wave 1 placed at the wave 2 low can take Fastly to 158 for a minimum wave 3 target. And that's simply a statement that I could never make about a value stock, that a minimum target could be 400 or 500% higher than the current levels. But I think that's accurate. I think this is a wave 1 and a wave 2. So the length of wave 1 placed at the wave 2 low will take Fastly to 158. I still want to see 33 not get broken, but I think very similar to Neo, Fastly needs to be viewed with members of the broader software sector like TWLO, like OKTA, like PSJ. I think the length of wave 1 placed at the wave 2 low will end up seeing that Fastly follows Datadog. This was all a huge wave 1, and we saw in 2020 that Datadog and Fastly moved dollar for dollar. Then they sold off together, but Datadog ended up being the leader. I think that Datadog was a leading indicator that Fastly is going to make new highs. Fastly is going to end wave 2 at the 78.6% retracement and go the length of wave 1 placed at the wave 2 low. All in all, Fastly going into the 150s is just a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. The only guarantee is that something like that won't be made easy. And I think Palantir and Fastly and even ROKU, we're starting to see, I don't really get into the fundamentals, but some of the fundamentals that are coming out about some of these growth stocks are ridiculous. I think a lot of retail traders, they hear all this insanely bullish news about a stock, but then they see the stock price is flat and they think, what's wrong, right? Something has to be broken, and I think what's really going on for a lot of these stocks is that they're still being accumulated, and we're about to enter a new quarter and a new year, and we're going to see the January effect take place, where just as all of the retail traders are capitulating and selling these stocks for a tax loss, the big boys are just ready to start taking profits on them. This is a big wave 1 and a wave 2 for Palantir. I think from this low, this is another wave 1 and an ABC correction ending wave 2 right near this wave 2 low. So until we get below this wave 2 low of 17, I think this is a wave 1 and a wave 2. We'll go to this wave 3 target of 36 before a shallow wave 4 and a wave 5 higher. Palantir is very similar to Fastly. It actually does have a low to trade against still of 17. The 78.6% fib would be slightly wider of 16. So I think we hold above 16. I think we showed this is a wave 1 and a wave 2. We'll enter wave 3, go to 36 before a shallow wave 4 and a wave 5 higher. So very similar to Fastly. I think it has to be viewed with members of the broader software sector. If we did get below 16, I think Palantir would still have a lot of upside. Unity Software, I think, was a leading indicator for a lot of software stocks, especially Palantir, because they're both in that IPO ETF together. and they moved step for step. They formed this wave 1. They have an ABC correction wave 2. They look very similar until all of a sudden Unity Software starts acting as a leader. It goes on this huge wave 1 and it breaks out of this IPO base, right? So that's a big deal. A stock that moved step for step with Palantir was likely a leading indicator in breaking out of this IPO base. I think this was a wave 1 and a wave 2 ending at the 61.8% retracement. So the 78.6% fib is a little wide of 104, but I think this is really nice evidence that this is likely a wave 1 and a wave 2 for Unity Software. And I think the next time that Unity Software takes a leg higher, it will bring Palantir with it. The length of wave 1 placed at the wave 2 low says that Unity Software has a lot more upside into the 260s. Do I think it's a great risk reward here? Honestly, I'm not sure. But if it's above the 78.6% fib of 104, I think it's ending a wave 2 and it's going to enter wave 3 of wave 3. The length of wave 1 placed at the wave 2 low says it's going to go on a wave 3 higher to 260. And I imagine that Palantir will be doing quite well during that time. So I'm using Unity Software as a leading indicator right now. Here's ROKU. ROKU looks great. It's a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 ending right at the 61.8% retracement. We got this huge wick, and I think right now this is a wave 1 and a wave 2. So the length of wave 1 placed at the wave 2 low can take ROKU all the way to 650 for a minimum wave 3 target in the bigger picture before shallow wave 4 and a wave 5 higher. And that isn't really even, too outlandish to say the length of wave 3 will be at least the length of wave 1 placed at the wave 2 low. So I think ROKU, I still want to see it hold above this wave 1 high on the smaller degree of 176, but it looks like we're wicking right now at the 61.8% retracement. This is that classic place for a wave 2 to end, and then we form the left side of the base, the right side of the base. We get a new year, we get a new quarter, and all of a sudden we realize this was a Wyckoff selling climax. They were getting every retail trader that was on margin out of ROKU before this big old springboard that we see take place in 2022. The classical traders will say ROKU looks great in the 500s, and they'll be right. The length of wave 1 placed at the wave 2 low says ROKU is going to be looking great in the 500s because it's going all the way to 650 before a shallow wave 4 and a wave 5 higher. 176 right now is the most important level for ROKU. It's looking good at the 61.8% retracement. Here is Zoom. Zoom is at the 78.6% fib. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. I think Zoom and ROKU, they really do kind of have comparisons right now to Netflix and Google. And I think one thing that's really important to remember is that they didn't make any of those stocks easy to hold. And what we're going to see when we look at Nano Dimension and 3D Systems is that retail traders were correct, that a lot of stocks in the ARK sector are huge monsters in the long term. They are going to change the world. What they were wrong about was thinking that those stocks would be easy to hold. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC correction wave 2 where the length of wave A placed at the wave B high is where wave C is ending. It's very similar to Alibaba in that it's at the 78.6% retracement, right? There's not really a invalidation level right now. I still want to see 173 not get broken. The length of wave 1 placed at the wave 2 low says 173 is worth taking shots at. The length of wave 1 placed at the wave 2 low says wave 3 minimum target is 700 before a shallow wave 4 and a wave 5 higher. So Zoom could be going to 700 for a minimum wave 3 target, right? I'm never going to say that about a value stock. I'm never going to say that, any of those, 300, 400, 500% targets are conservative, but that really is a conservative wave 3 target. The length of wave 1 placed at the wave 2 low says this was all going to be a blimp in the bigger picture for Zoom. The length of wave 1 placed at the wave 2 low says 700 is just a minimum wave 3 target. We'll have a shallow wave 4 before a wave 5 higher. So higher risk, higher reward. This is PayPal. PayPal looks beautiful. It's a wave 1 and a wave 2. It looks like another wave 1 and an ABC wave 2. We've talked about this idea that we'll get the January effect, a big rotation into ARK holdings. Tesla's going to take another leg higher. And I think the next time that we see Tesla take another leg higher with ARK, it's going to bring ROKU and PayPal and Squarecash with it. The entire software sector is setting up for the January effect. This is a wave 1 and a wave 2, another wave 1 and an ABC correction wave 2, ending between the 50 to 61.8% fib. So I still want to see right now in the short term that PayPal will hold the 61.8% fib of 169. I think it will. The length of wave 1 placed at the wave 2 low can take it all the way to 407 for, yes, a conservative wave 3 target before a shallow wave 4 and a wave 5 higher. So growth investing is a different game than value investing. The length of wave 1 placed at the wave 2 low says PayPal going up to 200%. 300% in the bigger picture is not really that outlandish. 407 would just be a minimum wave 3 target. We'd have a shallow wave 4 before a wave 5 higher. So if PayPal is above 167, I love the risk reward. Very similar idea with Squarecash right here. Squarecash looks like a big wave 1 and a wave 2. This is another wave 1 and another wave 2. This is pretty clearly a wave 1 and a wave 2 and another wave 1 and another wave 2. So if Squarecash is above 130, this is probably an extremely important chart for PayPal bulls as well that will hold above 130 and go the length of wave 1 placed at the wave 2 low. That could take Squarecash all the way to 413, right? We're talking about PayPal and Squarecash going into the 400s for minimum wave 3 targets in the bigger picture. That would be followed by a shallow wave 4 and a wave 5 higher. So really nice risk reward for both Squarecash and PayPal if they're above the 61.8% retracement. I think they look really good. Here's 3D Systems and Nano Dimension. I'm really covering this to give evidence for Nano Dimension. I think this is a wave 1 and an ABC wave 2. And I think this is a great example of retail traders found a lot of stocks that are going to take over the world in 2020, right? They weren't wrong about them. That's kind of what's sad. They weren't wrong about some of these names, but they were wrong to think they would be easy to hold. This is a wave 1 and a wave 2 for 3D Systems. This is another wave 1 and an ABC correction wave 2. Pretty tight. Will hold above 17. A wider invalidation will be the 78.6% retracement of 15, but I think this is a wave 1 and a wave 2. We'll go on a wave 3 higher to 56 before a shallow wave 4 and a wave 5 higher. I think that this is a nice piece of evidence. There's not, too many, great names to look at to get a feel for 3D printing, but this is one of them. This is a wave 1 and a wave 2. So pretty tight would be 17, a little wider would be 15. I think it'll hold both those levels and go on a rally with Nano Dimension to new highs in 2022. So 3D Systems is a great proxy for Nano Dimension as a neighbor in this sector. And this is kind of the idea right now that a lot of retail traders found a lot of great names in 2020, right? That's kind of the irony. It's the cruel irony of the stock market, right? There's that old joke that's really true. If you had bought Amazon in 1997, right, you wouldn't have a bunch of money. You would have sold it in 2001. And I think that that's kind of the case with Nano Dimension right now. This is a 1, 2, 3, 4, 5 wave 1 in an ABC correction wave 2 ending at the 78.6% fib, right? So this is why smaller position sizes are used by me, because the biggest invalidation right now that's actually meaningful is all the way down at 1.31, right? That means that really position sizing is the only form of risk management, but the length of wave 1 placed at the wave 2 low says Nano Dimension can go to 21, right? 500% more than the current price for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher, right? So higher risk, higher reward, also more difficult. The length of wave 1 placed at the wave 2 low says Nano Dimension going into the 20s in the longer term cycle is a conservative wave 3 target with a shallow wave 4 and a wave 5 higher. So I don't think a lot of retail traders were wrong that Zoom and Nano Dimension and ROKU and PayPal were going to change the world and be massive winners. But they were incorrect to think that those would be easy stocks to hold. Here's Marathon Patent Group. It's a wave 1 and an ABC wave 2. It's another wave 1, another wave 2 at the 78.6% fib. I believe Mara is acting as a leading indicator for crypto right now, that this is all wave 1 and wave 2. The length of wave 1 placed at the wave 2 low, as wild as it sounds, says we can go all the way up to 95 for wave 3 before a shallow wave 4 and a wave 5 higher. I really think what's most important right now is that Mara is going to be great evidence for crypto bulls in general, especially with Ethereum. We'll hold above 20, go the length of wave 1, place at the wave 2 low, go all the way into the 90s. I think, for the 90s, the more realistic target would be later this summer, but it could happen a lot quicker than that. We see a pretty explosive setup right now in a lot of names in crypto. Here's HUT. It's very similar. It's a wave 1 and an ABC wave 2. I think it with Mara acted as a leading indicator by going on this big wave 1 rally. They move step for step. This is a 1, 2, 3, 4, 5 wave 1 and a wave 2 ending between the 61.8 and 78.6% fib. I love the 78.6% fib right now of 6 as a nice kind of stop. A little wider invalidation would be this wave 1 high on the smaller degree of 5.59. I don't think either get broken. I really don't think 5.59 gets broken. And the length of wave 1 placed at the wave 2 low, while Mara potentially goes into the 90s this summer, can take HUT into the 20s back to the median and even the upper bound of this Andrews pitchfork. That's usually what we see. Wave 1, wave 2 for a high beta stock. Wave 3 will go all the way to the upper bound of the pitchfork. But anyway, it looks really good. Here's Bitcoin. Bitcoin obviously going to do well if Mara does well, if Ethereum does well. This is a wave 1 and a wave 2. I think this is another wave 1 and an ABC wave 2, ending at the 78.6% retracement. The length of wave 1 placed at the wave 2 low says Bitcoin going to 74,000 is a minimum wave 3 target. We'll have a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low. If wave 4 retests the wave 1 high, says Bitcoin's path to 97,000 is just within the cycle from the September low that we could see, Bitcoin in this 6-figure range. But the most important chart for crypto is Ethereum, because Ethereum is not even close to an invalidation level. This is gorgeous right here. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. This is another wave 1 and another wave 2, right? You can't just look at Bitcoin. Ethereum looks beautiful right here. This is another wave 1 and another wave 2. I think we'll hold the 61.8% retracement of 3.5K. For a higher beta stock, the 61.8% fib is a little tight. I think a little more wide and realistic would be 3,129. This is a wave 1 and a wave 2. So the length of wave 1 placed at the wave 2 low says that Ethereum is going to have an explosive wave 3 of wave 3. And it very likely is going to coincide with the new quarter and the new year beginning. The length of wave 1 placed at the wave 2 low says that 5.8K is a minimum wave 3 target on the smaller degree. We'll have a shallow wave 4 before a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is at least the length of wave 1 placed at the wave 4 low, then waves 1, 2, 3, 4, and 5 can take Ethereum all the way to 7,000. And that would just end this red wave 3 in the bigger picture.